Abhay, Aima and Sunil Singhania to walk us through what should one do. We are not going to get into postmortem what has happened and why it has happened. Now it's time to perhaps get our experts speak out how to protect capital, how to deal with this pain. Abhay, Aima, you've seen these crashes in the past. You witnessed the 2000 crash, the 2008 crash, the shakeout in 2013. I've been told it's nothing like that before. How did you keep your calm that time, and what are you telling your clients that how can they keep their calm right now?
See, I have a very simple take on this. The fact that there is value right now at these levels is, I think most people, no matter how pessimistic, would agree with that. The fact is also there is panic, and this panic has been there for some time. The period has been long. Now, the way I will look at it is that either this comes within, the panic stops within the next 15 days to a month related to the disease, because that is where the maximum problem is. Then, of course, you should buy because there is value, and you cannot really, as an investor, you should not really try and call the market if you have sufficient liquidity and you are able to sit with the volatility. The worst case scenario is that this goes beyond that point, that month. Then we are looking at a scenario where I don't think stock should be a concern. I think health and your personal survival will be a much bigger concern than really the health. So then, it becomes immaterial what asset class, what asset allocation, a different scenario unfolds then. That is the worst. So if you're looking at that, then it really doesn't matter whether you're holding stocks, whether you're holding gold or what you're holding. This is my, short take on this.
No, I understand that. Health and medical care is the priority, Abhay. I mean, that is something which is universal, and that's been the messaging. And we are messaging that, all of us are messaging that as responsible people. But I'll again like to draw back to something which is a fact. And the fact is that you need to take care of your wealth and protect your wealth. So my question is that what can one do? Because the pain is excruciating. The pain is gut-wrenching. Everybody is talking about long term, but my question to you, Abhay, is that there are several short terms you need to survive to see the long term.
Yeah, but I don't think, if you're in the stock market and if you have been there for some time, I don't think it is a question of that you cannot. This is leading to your personal survival. Yes, there is huge wealth erosion. We are seeing levels which we saw about 3 years back, which also means on the plus side that there is huge value now. But like I said, if this was to continue and not the panic doesn't stop, or the disease doesn't come under control within a month's time, which I think it will, but it's anyone's call what will happen. Then of course you should, if you have surplus liquidity, you should add to your position, or at least definitely not sell, at least protect what you have. Because if this was to get over within a month's time, the panic, I'm not saying the disease is going to get over, the panic within a month, the bounce back will be equally sharp. Like I said, the other thing is that if this is not to happen and it breaks out into a worldwide epidemic further, it's not classified as one, but I'm talking of then you'll be worried about, I don't think stocks should be a worry. I think you'd be worried about, do I go out of my house or don't go out of my house? How do I protect myself and things like that? Like you said, I'm talking psychologically also. So then, stocks become, or any asset class becomes a meaningless exercise. So it's like saying, what if there is a world war tomorrow? I mean, why would I worry about stocks then? I would worry about how am I going to survive? That's the kind of scenario we are talking about. Probably the deaths, if there was to be a war tomorrow, world war would be far lesser than what we are seeing if this was to continue over a period of time. So the bottom line is that if you're not seeing the end of the world, then this is a good time. If you have surplus as a less allocation in equities, you should dip in and start buying. If you don't have surplus liquidity or asset allocation is up to the hilt as far as equities as an asset class goes, then at least hold on and maintain, and you will see a major part of your wealth which has been eroded coming back as fast as it went away.
Sure. That's the point. All of us as well. It's work from home for most of us as well. But Sunil, as an investor, you're seeing minute by minute last 3 years of your accumulated wealth getting wiped off. As an investor, how is it that you come to terms with a market like this?
I think, no one likes to lose money for sure. And as you rightly said, I would say we have gone back almost 5 years, at least in the near term. But having said that, I would agree with Abhay that, once things stabilize, and we are all hopeful and optimistic, people and investors, the bounce back can be equally fast. So I think at this point of time, I would say that it's wait and watch. I would not be brave and say that whatever you have, put everything now. Because, the intensity of the fall and the kind of breadth of the fall, also there's absolutely no support in so many stocks. I think it is scary to say that, it is going to end today. We'll all be happy if it ends today. But I would say that, we already have so much investment. So wait it out. I would say in this kind of a scenario, the first thing is protect yourself and your family. Ensure that you stay healthy. The second thing would be obviously to preserve a little bit of capital and put it in when you have more conclusive evidence that things are improving. I would say that, yes, there can be different opinions about the coronavirus. It is a flu. It is not something which cannot be cured or will not be cured. Mankind is much more evolved. There will be a solution. The intensity and the speed at which the market comes up will also depend on how fast we are able to see number of cases slow down. So I would say that the investors have already seen maybe the 90% of the worst, and at this point of time, keep your cool, keep patience, don't get hassled by what you hear on a minute-to-minute basis, what you see on a minute-to-minute basis. And there will be opportunities for sure.
Okay. That of course, Sunil, I'm sure, and I really hope so, with both fingers crossed, that 3 years down the line when we'll be talking, it would be one of those retrospective times like that was a great time to buy. But the point is that, when you see your wealth getting eroded by every second, your first reaction is, what do I do now? How do I try and save and arrest the situation right now? What do? Do you take the hit and take whatever cash is available on the table?
No, I would not agree on that. I would not be sellers overall in the market. Yes, if you have a portfolio and if you see some stocks can be switched into something else where the rise might be faster or more sure, or where you have more comfort, you might do it. But I would not be a net seller in the market. As I said, 90% of the pain is more or less, at least I feel, behind us. For the risk of 10% of the pain, you get into a situation where you exit the market and then you realize that in 15 days' time, the markets are up 20-25% from where they are today. And that would be sort of a double hit to the sentiments and the portfolio and the wealth. So I would say that it doesn't make sense, frankly, at this point of time, to increase your cash levels for sure.
Disappointing according to what we've been hearing in terms of reactions all around. Hiking oil taxes, defending the rupee, not really seeing any major fiscal announcements, and we're still waiting to hear from the Prime Minister later today. But as of now, we've really not heard enough. The sense that we're getting is, it's perhaps still early for India, but do you feel it's important to arrest the kind of economic impact this could have sooner rather than later? Abhay?
You see, that it's a very tough call to make as to, I think people who have the the balance sheet in front of them would be the best judges. I don't think that this is something the decision makers would not be aware of. But I would agree to the fact that there is a damage due to the disease, and there is a damage due to the fear that the disease has created. I think definitely to some extent, both on economic grounds and psychological grounds, the government, like all governments should step in to at least try and control what they can control. They can't really control besides taking medical measures, you can't really predict how fast it is going to grow. But if you don't use what you have right now, and I think with the oil where it is, the fiscal situation, fortunately for India, is far better. And there are a lot of, pockets where actually, which we tend to ignore. Like everyone is reporting, for example, how the numbers are increasing in Italy and Spain. But there is very little coverage as to what is happening in China, which seems to be stabilizing. And in times like that, it is understandable. I mean, no one wants to see China is improving. Everyone wants to look at how fast Spain is going down or Italy is going down. But to answer your question, I would expect that the government would be more proactive in terms of trying to stem, or in whatever way they can physically trying to halt the cascading effect of the psychological and the economic damage. See, actual damage, we have come to a point where we start judging companies in a month's turnover or a quarter's turnover. A quarter does not make a company. For an investor, for a trader, yes. And the trader is doing his job. He's probably short and he's probably... So I'm not talking of the trader community because they know how to get back in as fast as they have shorting. They will also be able to turn around and go long. But as far as the investor goes, that it's a different... The mindset should be different. I mean, you can't make your investment decisions based on the next 1 week or next 15 days or next quarter or next 6 months also. I mean, that's not what makes or breaks a company. It looks like the way people are selling, or if investors are selling, that this company is going to cease to, or these not one company, majority of the companies are going to cease to exist. Because, yes, 1 quarter is going to be bad. I can say 6 months will be bad. But, please don't judge the fundamentals based on variation of a quarter. So where there are good companies, where there is value, they will survive, they will do better, and pent-up demand, they might even do much better in the next 6 months and make up for the 6 months. Of course, that's a very optimistic view. So it would be wrong to make your investment calls based on the fundamental slowdown which is there, and definitely will be there. But you can't gauge companies on a quarter, or like you should not flip. Also, if you get other income in a company, you should not go around buying it because that's not a sustainable thing. Similarly, this 6 month loss or a quarter loss is not a sustainable loss. Yes, if you are talking of a long-term disaster, then my first answer holds good. Then why worry about equities? You worry about, it's like a world war kind of a situation. So I think that is a big mistake that we are doing as an investor.
Yes, so many valid points there, Abhay. You're absolutely right. Everyone is starting to talk about collapses, whereas we've had a few managements, in fact, speak to us talking about how they're still assessing and haven't immediately seen an impact, while others, of course, depending on the industry, are already seeing a 30% hit on revenue, for instance, in, hospitality, travel, etc. You talked about pent-up demand, and I want to talk to you about that a bit more because, yes, looking optimistic right now. But, if we were to see things improve, at least, on ground, let's say in the next couple of months or so, where do you see the opportunity? And would it be safer to go in for demand-driven pockets as we turn inwards? Or would you look at other sectors where perhaps opportunities will arise?
I think the value erosion has been across the board. So you have an opportunity where the stocks you always wanted to get into, or at least I found at certain points where, overvalued or highly priced. I mean, that is, so I don't think it's going to be sector specific because the erosion has been across the board. So you have opportunities practically in very good stocks, fundamentally strong stocks, well-run companies, well-managed companies in practically every sector. So I would say that you pick up I mean, depending upon how diversified your portfolio is or how many stocks you want to track, and that's an individual, you pick up the best in each sector. I don't think that, I would really look at a sector, because the erosion has been huge across the board. Like you said, there is a 30%, let's for a minute assume there is a 30% drop in, but see, that is for a quarter. No one is saying that this is going to, even if there is a 30% impact for the year, you're on the value of the stock by more than 50%. So you're still, you're looking at 30% loss, and then if where the market was, the values were right. So that's a very mathematical way of looking at it. But even if one was not to look at it, a 30% erosion even in a year does not mean the stock loses value by 50% or 70%. It's more a technical play, and once this is stabilizes, people will, what I'm talking about, people will start looking at things and probably look back and say that, this was a good opportunity to buy, definitely not to sell.
Abhay as well as Sunil for joining in and sharing with us your outlook as to how one should be coping with the sell-off. And sell-off it certainly is.